Hello and welcome back to this edition of Daily Actives brought to you by Bootleg Macro. I'm Dustin and we are looking at NIO once again. And today was an interesting day for NIO because if you look at the red lettering here on the price column, you can see that today it closed at $14.63, but it has a red lettering with a white background, which on this data set means that it actually is 3 standard deviations above the 23-day average, which is fascinating that it's still that far above the average of 23 days. Now, we can see that we did get a drop off a little bit in volume. We do not have over 100 million shares traded, which is the first time since the 21st of July. That last time that we got a kind of a dearth of volume, or we got a drop off in the amount of volume, was actually the beginning of what was another bull run. I don't know if we would expect that, because the price back then actually was, if you can tell, the green background with the black lettering was in a standard deviation range of the 23-day average. So it was much more reasonable in terms of where the price is and what you'd expect between trending versus mean reversion. Now, when we're looking at the future price path, it looks like we've got a little bit of price to rise. It's probably because we still have volatility rising and correlation is rising with it. But today, it being down 4.38%. Now, that's not a big deal because this is the type of stock that can run 10% or 11% in a day, or 22% in 5 days, or 30%. So being down 4.38% is probably just on par with general volatility here. But not being a chartist myself, not really paying attention to the way that the charts or candles look, there is a little concern when you think about the way the behavior has been in the past, where this thing does make highs, kind of just pinpoints, and then falls right back down. And that's not a great look right there. So I'm not really long or short this one, but I just kind of am paying attention to what kind of signals I see. But I think it's really fascinating that even with the down day today, we did not lose our go long signal in our short term, intermediate term, or longer term, nor did we see a change in bullishness to bearishness like we had actually back in, it looks like that time we got back to the standard deviations here. So if we look, we can see that we do see a new rising bull. I'd say the most concerning thing, if anything, here is just that we are so overbought in terms of the bullishness. And I don't mean necessarily on the price. I'm just saying that it's this bullishness here is a representation in the green, where the bearishness is a representation in the red. And you can see that bullishness is completely winning in the market right now. This thing is not even near a mean reverted 50%, which is generally where the market wants to be. Of course, when you see things that are getting bought and bid up, and there's catalysts and there's market demand and there's chitter chatter on Twitter that drives sentiment and automated buying, you're going to see this type of move, because this isn't humans doing this, but this is a representation of people's money. And eventually, at a certain point, people are going to start to realize, like, do I want to have these prices at this price because I've made money already? Like, if you bought here at $9 or $10 and you are currently up at 14, you're up 40%, right? You're up 40 or 50% on the money that you put in. So that's really a very good place to, I mean, if I was up 50% on any amount of money, I'd be very pleased. I'd probably keep a very tight stop. I'd probably keep it, I don't even know if it'd be at the high here, the bottom here. Maybe it'd be up here around like 13 or 14 bucks, maybe 10. All I know is that this is the type of move which generally is the beginning of kind of a little shift, at least to maybe a consolidation of gains. You're not going to necessarily expect this thing is going to fall all the way back down to like here, where we were getting bearishness in May, which I don't even know if that was necessarily bearish, or that was March, which that was bearish. What I think we're probably going to get is a consolidation of gains somewhere around like this level, like 13, because that was probably a top earlier. And if you get back to 13, it's not going to feel great if you buy right now. The volume is definitely there, but you can see the drop off in the volume. I would probably expect that we're going to see a drop below that red line, which is the 15-day moving average of the volume, over the next coming week or so. And this probably is going to be an opportunity for something really good or really bad to happen coming into the fall. Probably really good, but for the short term, it's going to feel painful because it's been so easy in NIO. Now, when we look at the volatility, we can see that volatility is actually breaking out. It's essentially at the point now where we are expecting volatility to continue to break out, which is kind of odd, because most of the time what you see is a nice, like, kind of, like a rolling hill. You don't usually see a hill with a valley, that it starts to go and then it rises even higher. But there is some precedent here for how it looked in the weekly. And then back then in 2022, we saw that as the volatility was rising, the correlation was negative, which was when the price was falling. So as we're rising right now, we do want to see the correlation continue to rise. It is actually very positive to see that this blue line is breaking back above the 15-day volatility to price correlation, because what that's showing is that the price is, the derivative behind it is either catching up to the movement in the price, or the price has a direction and the derivative of volatility is showing us what the future is going to be. Now, the trade range, as one would expect, has widened out because volatility is breaking out. The craziness of the way that these look is it's curling back. Yeah, I really have never seen a curl back like that in terms of the way that it moves. But the volatility character of NIO right now is probably one of the oddest I've seen in a long time. And I think it's mostly because of what the price was, as well as the type of information and the type of market that it is. We look at the weekly trade range here, we can see there's so much more room to run. I mean, we're at 1474 through the close last Friday. This thing was all the way up at 60 before, and that was probably not even with a lot of short interest back in 2021 or 2020. So it really tells you that there's an opportunity for a aggressive move higher, no matter what the price is on NIO at the moment. But it does let me think that there could at least be a little bit of a pullback from a mean reversion standpoint, getting to 69.5%. Just for understanding, normally this indicator tops out around 60% and bottoms out around 40%. Now you see this thing is at 69%. So we're probably going to get a little bit of mean reversion. But tell me what you think in the comments below. Are you long? Are you short? Do you like it? Do you love it? This is even a good review. Before you go, subscribe to the New High newsletter. We give you 25 stocks breaking out every single Sunday to your inbox for free.